This is a stock analysis blitz for Angico Eagle Mies. Before I start this video, please remember that I do these videos just for fun as a hobby and always speak to a qualified financial advisor before making any investment decision. Angico Eagle Mies are a Canadian senior gold miner listed on both the Toronto Stock Exchange and the New York Stock Exchange. They produce copper, silver and zinc as byproducts, but the vast majority of all their income comes from the mining of gold. They have gold mining projects in Canada, Australia, Finland and Mexico, but as you can see from this pie chart, the vast majority of their current reserves are based in Canada. Now here I've got their average realized gold prices in 2022 and 2023, the last one being my estimate, and against that I've got their reported all-in sustaining cash cost for those years. And from this we can see that there is a fairly nice margin they're getting even in 2023. I've got here their market cap put up against their net assets, and then here is their reserves, a very crude calculation of their reserves which I've done, which would then make them look fairly well priced at the moment. You know, if you were to cut that in half to take account of discounted flows and things, even then, you know, conservatively speaking, it looks like a good price. And then I've got stacked up against my calculation of their current resources. Now, the reason why I'm looking at these in the first place is it's because I've done a large video on gold, which you can see here. And in that video, I was discussing how the gold price had just completed this cup and handle technical formation. And so I'm speculating that if it does finish at new all-time highs, I think that could be the harbinger of a nice bull run in the price of gold. And in that video, I was looking at the 91 Global Gold Fund as a way of investing into this gold price speculation. And Angico Eagle Mies are actually the largest stock in that fund. So that's where I'm taking a look at them, not because I'm particularly going to invest in them, because I can't do that in a very tax efficient way, but I'm doing it as part of checking out some of the stocks in this investment fund. Now I've got here over the last 5 years the price of Angico Eagle Mies Limited against the gold price, which you can see represented with this orange line here. And actually over the last 5 years, the price of Angico Eagle Mies hasn't actually gone up that much less than the price of gold has. So I find that interesting because a lot of people have been looking at how the price of gold is at a new time high, but how the mining stocks are actually low compared with the previous all-time high. But for making this comparison, which started at an earlier date, it makes it look apparent to me that what's happened here is when we had the first high of that cup in the cup and handle formation with the gold price, the actual price of the gold stocks perhaps overshot quite a bit. And so the reason why they haven't completely copied the cup and handle was because they went up too much in that initial run. And so these gold stocks might not be as underpriced as a lot of analysts are saying when you take that into account. These elevated prices around here, do remember that they coincided with all of the liquidity in the market following the governments doing all these bailouts and things after the COVID crisis. So actually the price now might not be so undervalued as a lot of people are saying when you take account of that. So looking at the history of them over the last 5 years, and in 2020 when we had the COVID crisis, they actually had to close most of their mines due to government restrictions. But obviously that was only temporary closures in the end. And then we see a spree of acquisitions. They acquired TMAC, gaining the Hope Bay project in 2021. and then they acquired the Kirkland Lake Gold Limited, gaining the Detour Lake project in Ontario, and that was in 2022. And in order to do that, they had to do a 85% dilution. And then in 2023, they bought a company, Yamana Gold, and with this transaction, they acquired the Malartic complex in Canada. And they announced in 2023 that they're actually allocating $500 million for a share buyback. So looking at their numbers, and they have got a very impressive increase in their revenues, and the expenditure doesn't seem to go up too much. These large changes are obviously related to the acquisitions that they've been doing, particularly the Kirkland Lake Gold Limited buyout. But it does result in a increasing net income. Now in 2023 we have a bit of an anomaly, because as part of all of these buyouts and takeovers, they had a realized gain they had a revaluation gain. So that's a bit of an anomaly. But even if I take account of that, you see that they've still got a very nice profile here. We can see also with all these takeovers a substantial increase in their assets and net assets. When you see that they have 0.4 billion in cash and 1.4 billion in gold waiting to sell in terms of their inventories, that really does show you the huge scale of this company. In terms of their liabilities, and I don't like it when companies have debt, and they seem to have been taking on more debt in order to achieve some of these takeovers and mergers. They actually had to do a 85% stock dilution in order to achieve the buyout of Kirkland Lake Gold, and then on top of that, an 8% dilution for the Yamana transaction. But then, as well as all these stock dilutions, they had to do an additional 0.6 billion term debt, where they took on 0.6 billion of debt, and they have to pay SOFR plus between 0 and 2% interest on that, depending on their credit rating. So it does make me a bit anxious to see them doing all of this extreme measures, these huge stock dilutions and taking on massive amounts of debt in order to build up their resources with these takeovers. However, according to the books, the result of all this musical chairs has left them with significantly higher net assets. And so, as you can see with this profile that I do, their market cap actually, despite all of those stock dilutions, it doesn't look that bad now compared with where it was 5 years ago when measured up against those net assets. And they have a price to book of 1.4 and a price to earnings of 27. Their debt, I suppose, doesn't look quite so bad when measured up against their overall assets. So I've got here their reserves, and what I've done to calculate the value of those reserves. So these are all 2022 numbers, and what I've done is I've got the average realized gold price, and then I've deducted from that the AISC value, which is in dollars per ounces. So that then gives me a margin in dollars per ounce, and then I've times that by the total amount of their reserves in ounces to give me a value of their reserves. So this obviously is a very crude and rough figure, but it's just to give me an initial ballpark, first glance kind of look, which then when I compare against their market cap and their net assets, you could easily chop off half of this for future discounted cash flows or whatever other reason, but you're fairly safe here that they do seem to be reasonably priced, to say the least. So this is a stock analysis blitz so I'm just giving it a very quick glance. If I do a full video on the stock, I go into a lot more detail in calculating their reserves, including future discounted cash flows and things. But just for this very broad initial glance, they do look certainly like reasonably priced, I'd say. But what I think's happened here is what seems to come to light here is there's been a lot of consolidation in the gold mining sector. I mean, think of Newmont and Newcrest with their merger, but all of the big gold companies are doing lots of takeovers at the moment. And I think that what's happened is that these big senior gold players, they only like to invest in squeaky clean places like Canada and Australia. However, in these parts of the world, I think we're at a point now where it's starting to get harder to find new decent gold projects. So it's like all the companies have been competing with each other for the remaining resources in order to ensure that they have resources for future company growth. And so that's what all of this consolidation is all about. It's a shame about all of the stock dilution and new debt they've got to take on in order to achieve that. But by doing these consolidations and buyouts, they perhaps do it at a better deal. They get a better deal than if they were just outbidding each other to outright buy new projects. But certainly the actual portfolio does seem to be of reasonable quality, and they do seem to be at an okay price versus the gold price, you know, given my very brief initial glance at this. So it does all check out. However, looking at the price history of Agnico Eagle Mines and assuming that that's fairly representative of the gold mining sector, these gold mining stocks, even huge companies like Agnico Eagle Mines, they have very volatile stock prices compared to the price of gold even. And so really you've got to look at them, you really can only look at them as a speculative, leveraged play on the price of gold itself. So I've definitely learnt a few things from a very quick glance here, a stock analysis blitz on Agnico Eagle Mies. I hope you found this video useful and wishing you a very successful 2024.
I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.